welcome back to CoinDesk Live from the Avalanche Summit in Buenos Aires, the premier Avalanche community event of 2024. I'm Jen Sanasi here with my co-host Zach Seward, and we are bringing you a very special episode of Markets Daily today. On this show, we navigate the currents shaping the crypto markets. So whether you're actively trading or just curious about the volatility that is the crypto markets, this show is your compass to navigating the space and understanding what's going on. Joining the show today is Agora co-founder and CEO, Nick van Eck.
Hey, thanks for having me.
Thanks for being here. Now, this is a little bit different. This show is all about the crypto markets, right? So far, we've been talking about LATAM and the event and cool things that people are building. You're building a very cool thing. We're going to get to it in a second. But I got to ask you, Bitcoin was up over $67,000 this morning. It's on a little bit of a rally after just kind of doing nothing for a while. What do you make of this price action? What's driving it?
I think it's fairly straightforward. As interest rates come down and people expect liquidity in the markets to go up, risk assets go up. And so that's why you saw, I think, Bitcoin take a jump over the last few days. And people are expecting that interest rates are going to continue to come down over the next 12 to 18 months. I don't think the exact month matters so much as what the trajectory of rates are. And as people continue to expect rates to go down, you'll see risk assets go up. So
I'm pretty sure that you've told me before you don't do predictions, but I always have to ask, so I'm sorry for this. But some guests who have come on the show in the last, let's say, couple of weeks have predicted that we will get another all-time high probably before March. Curious if you agree or disagree, or you're just going to leave me hanging dry.
Yeah, I think depending on what happens in November in the United States, I think you could see certainly an all-time high before March of next year. Obviously, there's, I think, one group that's probably a little bit more pro crypto, and that'll resonate in the markets if that group gets elected. So I think by March, if Trump wins, we'll see a new all-time high.
And if Trump loses, you think maybe we won't?
I think there'll just be a little bit less animal spirits. I think ultimately interest rates are probably still going to come down a little bit. But he's been very active and vocal within the sort of crypto community, or at least is the seemingly more pro-crypto candidate. So I think that'll get the animal spirits going. But I think regardless, we're probably going to see an upswing in the markets given where interest rates are headed.
Now, you brought up Trump, so I got to ask about this token yesterday. This token news. I don't know if you've been following all the Trump token news.
I saw that they launched the fundraise for it. I haven't kept too many tabs on it, but I heard that the site was down at one point. But I don't know, you guys may be a little bit more up to date on it than I am.
Yeah, we've been preparing for this. Let's talk about Agora. Stablecoins have been a theme as we get this show started. We've heard that stablecoin adoption, especially in Argentina, is growing at a rapid pace. You are very focused on stablecoins with Agora, AUSD. Talk to me about how you're looking at the LATAM market.
Yeah, it's a large focus for us. And the way that we're focusing on it is working directly with businesses like we do across the world. So what's different about our model is, we're one institutional grade, but credibly neutral, right? So the other institutional grade stablecoin is USDC. They have a singular partner in Coinbase, so they share about half their revenue with Coinbase. Our view is that it's all these different businesses and their users that participate in this economic system, and they should actually be capturing the majority of the value of that. And so we're working with local exchanges, local cross-border payment providers, and what we do is we KYB those entities and then share income with them based on AUSD on the platform. And so it's a very deep relationship. We sort of embed with these businesses, but it's really flexible. So we can work with commodity import-exporters, payment companies, crypto exchanges, traditional neobank fintechs, whomever. And so I've personally spent a lot of time here. We actually have employees that are based in Argentina already. And what's nice is, this is where real crypto adoption has already started to happen on the financial side. And so having employees that are using these products day to day is very different, and it provides a good perspective on informing where we should take new products in the future.
You mentioned some of the industry verticals, and of course, Argentina being kind of unique in facing some of these challenges of hyperinflation and other economic issues.
Yeah.
Are there any other regions that stand out to you that you think will see stronger adoption in terms of stablecoin payments, and if so, why?
Yeah, for Latin America and South America in particular has been a really good hub of fintech innovation beyond crypto, right? It's sort of, they have the benefit of sort of hopping the system. So you've had things like Pix get launched in Brazil, which is actually like a state-run program, but it enables instant settlement of payments in real time. And so it's always been a hub of fintech. And I think people aren't used to the traditional banking system like we are in the US. And so you have people that are comfortable using neobanks, fintech apps, payment applications at a much more broad usage and spectrum than you would in the United States or other Western economies. And so I think it's always been a hub for fintech, and that's why you're seeing it take off so quickly. But also, you mentioned the hyperinflation, is people have to be so attuned to what is going on with their finances on a day-to-day basis, because if you're not, then you're just losing your own wealth because of inflation, right? And so you almost have this hyper focus on what is going on with my personal savings, my investments, and I think that's why in part it has been a hub for fintech innovation in the past with things like Nubank and others.
Agora is a relatively young company. You've talked to us a little bit about the differentiators among some of your competitors, but when you think about the big stablecoin issuers, USDT, USDC, how do you think about taking market share from these other stablecoins and growing beyond Latin America?
Yeah, so our view is one, the stablecoin market is outside the US because it's most valuable there, right? You have cross-border payments, EM latent dollar demand. So it's very fortunate for us that our biggest competitor in USDC has this partnership with the largest US exchange. And our view is, okay, today you have these two players in Tether and Circle, right, which are really extracting rent from this whole system. They're making $8 billion a year off of sort of everyone else. And our view is, okay, well, if you go directly to the business owner and say, hey, we'll share cash flow with you based on the stablecoins that are on your platform, like that's going to resonate with them. You don't have to worry about compliance, building a liquidity program, tech, any of that. You're just capturing the economic value, and it's 100% margin, and that resonates with people, right? Whether it's a DApp like Morpho or a payments business or an exchange, and it's super flexible. And so our view is that by going direct to all these businesses, they can then sort of change their product and orient it around AUSD versus a USDC or Tether, and that'll help to drive adoption. We obviously have some really good early partners as well, because they feel like they've been cut out from this system. And in some ways, USDC is actually a competitive product to them, right? So because for every dollar that USDC generates on Avalanche, for example, half of that is going to Coinbase, who of course has their own chain now in Base, right? And this is true across crypto. Is with Circle, half that revenue is going to a company that has a wallet, exchange, custodian, prime broker, and most people don't like that. And so our view, which I don't think is a particularly insightful one, is like, hey, the market of everyone else is larger than the market of sort of just Coinbase, right? And so going to all these businesses and being that partner for them has resonated.
Hey everyone, did you know 52 million Americans own cryptocurrencies? That's not just a number, it's a movement, economic, social, and political. Decentralized finance, blockchain, and digital currencies are more than buzzwords, they are the future. This November, it's on us to show up and step up. We need to protect crypto to ensure it continues to fuel innovation and freedom for our families and businesses. Don't let this opportunity slip by. The future of crypto is on the line. Make your voice heard this November and pledge to vote now at standwithcrypto.org/pledge.
Talk to me about the asset mix of AUSD. Is it the same stuff that you find with USDC, where it's T-bills, cash equivalents, or are you guys further out on the risk curve to make sure that those yields are there for these participating businesses?
Yeah, it looks quite similar. So our view is you need to be institutional grade and scalable from day one. So it's primarily composed of overnight reverse repo and short-dated U.S. Treasury bills. State Street, which is one of the largest globally systemic banks in the world, is the cash custodian and fund administrator of the fund. So they could take in $100 billion tomorrow, and it's not that big of a deal to State Street, where it would be to regional banks, right? And so starting with a world-class scalable bank was really important to us. And then Van Eck, which is a $100 billion asset manager, manages the portfolio. So you have someone that's regulated in dozens of countries globally, manages over $100 billion, managing those assets so you know that they're safe and secure from day one.
That's nice of them to get the naming rights on your last name, too. I like that. Yeah, that's a good deal. You got to
no other relationship there.
Yeah, that's nice. Yeah, that's a straight sponsorship deal. I like that.
Yeah.
I was thinking the same joke, Zach, so thank you for...
I'm trying to get that. Could be a Van Eck, right?
Why are you so passionate about this? I think we've talked about this before, and I haven't asked you. What makes you want to solve this problem?
Yeah, so I think one of the reasons that I got into crypto in the first place is because it solves like financial problems for the world's most unfortunate, right? Today, if you look, are in Mexico, 50% of the population is unbanked or underbanked, and that's mostly because banks don't want to serve them because they can't make enough money. They're not good customers, so to speak. But with blockchain technology and fiat stables, like they can be their own bank and save in the dollar, which is going to retain value over time, right? And so it really promotes financial freedom globally and gives access to financial opportunities to those that are least fortunate. Also, I was looking at how the stablecoin market was developing with Tether and Circle, and I felt that it was worse than the banking system, right? Like they were really just rent seekers on top of all of crypto. And I love this space, and I said, hey, well, if we can push back 80% of the revenues from Tether and Circle to all these businesses across crypto, that makes this whole space much stronger and better. And so like that to me was a worthy enough goal, but I think there's a large mission component around it as well. And then lastly, I'll just say like, I believe that we are in inning one of blockchain eating financial services and payments. And I wanted to basically dedicate my career to this because I think you can reduce transaction costs, remove a lot of middlemen, and inject a lot of dollars back into people who deserve it versus rent seekers, both in the current financial system and sort of at the stablecoin layer that we have now with Tether and Circle.
How many businesses are on board right now? What's the rate of growth looking like for you guys? Is it just a BD hustle game right now, or what's the next 12 months look like?
It is a BD hustle game right now. We have 50 businesses that have onboarded in the last 3 months. Growing pretty quickly. We've now already hit 100 million in weekly volume on Avalanche alone, just within 2 months of launch. We're a little over 70 million in minted today. Expect to be several hundred million over the next couple of months. And it's just, it's a ground game. Getting as many customers up and running as soon as possible and building liquidity across new networks and environments.
Nice, like it.
It sounds like you were saying before, in many ways, there are aspects of the industry that are replicating the same issues that it's trying to solve. How do you see the industry moving away from that? Or is it a healthy balance that looks somewhat like the traditional financial system looks now, with these kinds of pockets of solutions for the people who need them?
Yeah, I think ultimately in 10 to 20 years, it's going to look very similar to the existing financial system in some regards, right? Like you're going to have exchanges, you'll have dedicated custodians, like you do in traditional financial markets today. What I do think is you'll just have a lower barrier of access for individuals to access financial products, right? Whether it's just dollars on chain, like stablecoins, or relatively safe yield products that they don't have access to today through, an Aave, the Aave lend and borrow market or a Morpho Vault. And so I think it'll be a combination of the two, but we'll see.
All right, Nick, we are going to have to leave it there. Thank you so much for joining us.
Yeah, thank you for having me.
From our live setup here.